Good afternoon, traders. This is Lee Lewis with Trader for Traders with the daily market update for Wednesday, November 12th. So, as I think is no mystery to anyone, the reopening of the U.S. government tends to be dominating the headlines. Look, that is on schedule to possibly officially open up tonight. I believe they're supposed, I believe Wednesday there's supposed to be a vote to reopen. So we should see everything back up and running by Wednesday night. Thursday morning, that continues to dominate the headlines. We see the markets, the equity markets reacting to that. We're seeing kind of a bit of a mixed day on the market, but the Dow was up over 1%. NASDAQ was down a little bit, so kind of a bit of a mixed market. Some of that, just so you know, was caused by, for those who may not be aware, ADP, the largest U.S. private employer, has started to release its own employment numbers in the absence of any numbers coming from the Bureau of Labor and Statistics from the U.S. government during the shutdown. They're releasing their information on Tuesday mornings. It's a confusing report. It's tough to follow because they simultaneously say that jobs have been created and jobs are lost. But today it came out, ADP reported that the U.S. over the past 4 weeks had lost over 11,000 jobs. So that saw, if you took a look at how the equities were working today, we saw an initial dip in all three of the major indices right out of the gate, and then they did recover and then achieve some rebound. Except for the Dow, except for the NASDAQ, which stayed a little bit lower, a little more subdued. But the S&P and the Dow's almost back to its previous record high. But that initial negative reaction was due to that ADP number. I think the market is trying to figure out how much it can trust that number, how much weight to give it, because it is so new. And now with the government reopening, we're likely to see that number become less and less relevant because I think we'll be able to rely on the official BLS numbers coming out of the U.S. So didn't see a whole lot happen in the currencies over the U.S. trading session. The big mover of the evening, of the past 24 hours, has been the Canadian numbers. The British numbers that came out, the employment numbers that came out last night, my time, 11 o'clock my time, and they were not great, as everyone can see. We had weekly earnings were down, actually shed jobs, minus 22,000 jobs, unemployment rate up to 5%, and the claimant count, 29,000 more people on unemployment. So that isn't great from a British standpoint, but what it didn't do is create a huge movement in sterling, and that's because if we look at the rate cut predictions coming out of England, this number currently is they're predicting a 97% rate cut from 4%, 25 basis points down to 3.75%. This number I think was in the 80% or 75% probability or likelihood yesterday. So the market had already factored in a large percentage of a potential cut. The numbers that came out yesterday basically, you can see at 97%, basically guarantee that the BOE is going to cut by 25 basis points. And now we see that 23.7 of those 25 basis points have already been factored into the market. And you can see that reflected in what sterling did after the release. Let me pull that up. Now we had a little pop here on euro sterling, went from 87.80 to about 88.12, so about 35-40 points. We had about a 75-point move in Swiss. We had the Canadian against the Canadian dollar dropped about 60 points, then rebounded. Not a big movement in the yen. So numbers like that, without the market already being short sterling, would have usually caused sterling to weaken 150, 200 points. But because the market was already short sterling, anticipating the rate cut next report cycle, that the numbers did not have the outsized effect on the currency that you would normally see in such a circumstance. So let's take a look at what we have coming up today. We have not a whole lot. These are the numbers from yesterday. So this evening we have some European, these are the final CPA and, final CPI and inflation numbers coming out. Those typically don't move the needle because they're basically right in line with predicted, because it is the last estimate. Nothing coming out over the evening. For early in the morning, nothing major coming out of the U.S. Someone from the BOE is speaking in the morning, nothing moving there. So other than building permits out of Canada, it's kind of a secondary, almost tertiary number. There's not a whole lot that is going on. I'm anticipating not putting a trade on over the evening and into tomorrow. My focus is going to be on the GDP numbers out of England coming out the next day on the 13th, your guys' time. It'll be the 12th my time here on the West Coast. And also the Aussie employment numbers. That's probably the big mover. I think Brad will jump on with a daily market update to give you an in-depth analysis of that. But I'm not seeing a whole lot to get me excited. One thing I did wanted to mention to you as a possible trade strategy for those that have access to the live signals is, and I'll give you a little background for this, I am located, as I mentioned, on the west coast of the U.S. This is probably one of the worst time zones to trade. I have to, if I want to trade any live releases that happen in New York, those happen at 5:30 in the morning my time. European and British numbers come out at 11 o'clock, 12 o'clock, 1 in the morning my time. So super late at night. So really all I have lined up is in the afternoon I can catch the beginning of the Asian session. So what I've developed is a bit of a strategy where I'm using Primetime Pro in combination with these live signals to enter orders or enter trades on Primetime Pro to trigger while I'm not at the screens. And what I've been doing is I've been taking a look at all of the indicators that that the live signals create. And I'll look for something like this. US yen is a good example. We have bullish direction, we have bullish short-term momentum, bullish long-term momentum, and the alerts are in neutral. What I've been doing is I've been entering a trade. I'll do my secondary analysis to make sure the setup actually looks good and there aren't any reasons not to enter the trade. But assuming everything looks good, I will use Primetime Pro to enter a long trade on US yen to trigger when the short-term alert comes into the buy zone. And I'll put it on before I go to bed. I'll check it in the morning. If it triggers, more often than not, I am making money on it. It becomes a profitable trade. Worst case scenario generally is that it just won't trigger because the stochastics won't get into the overbought or oversold, whichever is appropriate at the time, to a sufficient level to actually trigger the trade. I think that I've only lost on these trades maybe one or two times. So I found that to be an effective strategy for those of you who might not be able to be at the screen the whole time, or there's a particular trading session, maybe you're in Australia and it doesn't make sense for you to trade the US session. Maybe you're in the Asian session, doesn't make sense for you to trade the European session. You can have access to these sessions while you're not at the screens by using something like this. I've used it to my advantage. It's made me some good cash. And another thing it does is it's all happening while I'm not at the screen, so I'm not there to have my personal biases come in and screw up the trade. So if that's something you're looking to do, I recommend you take a look at it. But I don't see anything specific that could be happening today. I think we need to focus our attention tomorrow on the Aussie employment numbers. I think that's going to be probably the best opportunity this week. All right, until then, happy trading.